market is talking to you every single second of the day.
Yeah.
You just have to bother listening. You have to have a passion for the job. This is about passion. This is about loving this. Because if you don't love it, I personally believe you can never put the hours in that are needed to be successful. You see a good trader when he's digging himself out of a hole. That's when you really see a good trader. Respect the market. Market is always right. We might not agree, but if you short and the price goes up, the market goes up, you're wrong. Most difficult thing for a trader to actually look in a mirror and actually comment what he sees, not what he wants to see. It's amazing that one little mistake on the day can have an influence for the rest of your day, for the rest of your week. Overtrading is a big element, which obviously makes brokers happy and makes retail accounts losing money. So that to me is gut feel. Gut feel is not like, you have a crystal ball or something. No, it's a result of work.
Welcome to the AlphaMind Podcast, the podcast which explores trading and investing through the lens of the personal and human aspects of performance. We explore themes such as trading psychology, behavior, mindset, and many of the intangible aspects which underpin success in financial markets. The AlphaMind Podcast is delighted to be associated with the Society of Technical Analysts, the STA. The STA is one of the world's leading and most respected bodies which trains and accredits members of the trading and investing community in the practice of technical analysis. Welcome to this week's AlphaMind Podcast with Stephen Goldstein and Mark Randall. Our guest today is Beat Nussbaumer, a veteran FX trader who has held senior trading roles at major investment banks, including Bank of America Merrill Lynch, Goldman Sachs, UBS, Morgan Stanley, UniCredit, and Commerzbank. Now, he's held market-making roles, he's held proprietary trading roles, he's had a very long and distinguished career, and now he's well into his fourth decade in the financial markets. Beat is one of those people who's literally been there, seen it, done it, worn a T-shirt. So nowadays, he is running his own private portfolio, he's mentoring traders, and he also provides research to the FX market. So without further ado, we'd like to welcome today's guest, Beat Nussbaumer.
Hi, Stephen. Hi, Mark. Thank you very much for having me. Yeah, so I'm Beat Nussbaumer, as you already mentioned. I own my own firm now, which is called MacroBeat.co.uk, which is a sort of that side of the business is the tutoring, mentoring side of the business, something I sort of taken up 2-3 years ago, just out of personal interest, realizing the lack of, how should we put it, true experts out there who, as you mentioned, been there, done it, worn the T-shirt, and just feel like there is a gap in the market for those that really, really want retail traders to learn from those people who've done it for, many, many years, rather than all the sort of things you see out there from people just selling a lifestyle with a Ferrari and a yacht. On the other side, as you mentioned, I'm running my own sort of money now, trading for myself for the last 3-4 years. So I still have the same sort of skin in the game as I did before. Obviously, trading your own money or that of some investors, you change your trading style again somewhat. And I did definitely adopt the trading style again from the way I used to trade when I still traded in the banks.
That's very kind of you. Thanks, Beat. I think we're going to get into some very significant detail of just understanding your approach. I think if we look back over your career, perhaps the first question to ask is that, what part of your process was something that really kept you on track, that kept you focused with, as we know, so many volatile stages of the market, and the regulatory change that came with it, and of course the business changes that went along the way too. But was there a way of you managing your process of just engaging with the market that really stood you very, very well?
Yeah, to be honest, I have to give credit to a very tough, or my first very tough boss I had back at UBS in UBS Zurich, Yves Perriard. He, has been one of the big names in the market back in the 80s. you got really introduced to, which I still think is a big key, is risk management. So risk management was the absolute key, even back in the 80s, to understand what kind of risk you have, what kind of limits you have, what kind of money you have to produce, and what are your sort of downside stop losses. And that is something I learned back then. Obviously, you refined it over the years on how to, push the boat out when you onto something, to learn when to back off and so on and so forth. But at the heart of my trading, and that has stayed with me for the last 35 years, is risk management. You fully understand, risk, your overall risk, your loss side, and in terms of risk reward, which is obviously the same kind of story of when to actually accelerate your risk and when not to. And obviously, as a young trader, you get it all wrong by probably pushing the pedal in the wrong moment, when probably the more experienced ones start to realize to back off somewhat. And, it's a journey, and that's what I sort of talk to retail students I have that, get frustrated very quickly because they think, I don't get this, I don't get that. I say, listen, I was not born a trader. I just had the luck of, learn the craft from real experts, which wasn't my money either. Yeah, of course, if you do a bad job over the years, you get fired. Yes, that's your downside. But the difference learning trading institutionally is, you're allowed to have risk, you're allowed to lose money, you're allowed to learn from losing money, because sadly, that's where you actually learn. And so that's what I try to do when I tutor retail traders. To say, you will still make mistakes, and the mistakes are part of your journey. But what I can help, or what an expert or a senior trader like myself can help, is trying to, avoid those mistakes that all the retail traders do, which are unnecessary. And it starts, again, from risk management, starts to, when you don't have an idea, don't trade. If you feel strongly about something, have some decent risk, et cetera, et cetera. So it's been a journey, and this is really, this was the cornerstone of my trading career: risk management, then learn about risk reward, and then obviously comes the rest, like learning about macro, learning about data, learning about central banks. That's just all knowledge everyone can learn it. Then you just have to really piece it together.
And of course, that early part of the journey where you're building this base, I guess, obviously myself from the broker side of the business, actually from your point of view, you must have also had significant support and encouragement from the brokers that you interacted with, and you probably have, a broker that particularly stood out as being the guy that, I guess, supported you through difficult times, that gave you, I guess, idea encouragement, and some sort of social chat. Because of course, if you look at the professional world and compare it with the retail world, it doesn't have that. It doesn't have that sort of quasi mentor, as it were, that's spurring you on and getting you through the lumps and bumps of markets. But I guess you'd have found the same thing, though, that broker support was also quite invaluable.
Absolutely. So I would, you mentioned an important point. So obviously you had the one side, which is, your insiders inside the bank, your senior traders. The other one is, the broker usually when you got into the market. Back then I got into market at 20 years young. And so you're like totally green and wet behind your ears. And then you get introduced to a broker who's been there already for quite a few years. And obviously some self-interest of having a good counterpart in the bank to create volume, but the side effect has been they've taken you by the hands in the beginning to, especially as you point out, the old days with interbank market, it was very easy to get totally run over day by day by day by day. And so the broker was that link of, helping to protect you, teach you, and so on and so forth. So that was definitely, I definitely built strong relationships with the brokers I traded the currencies with, and obviously as it's natural, you have your most favorite one, the one which you work most, because, it's a people's business, and trust is of the utmost importance, especially when you work in a big bank. You have to cover big volume. You get caught on some big stuff, try to get out of it. You need someone that helps you get out of your risk, and you have to trust him, like, as if he would be your brother. And that is incredible relationships you build in those days, which obviously, sadly, in these days, maybe only work on the emerging market side, maybe talk FX spot, and maybe possibly still in some other asset classes. But the way we knew it sadly no longer exists.
Yeah, this is a point which has come up with lots of our interviewees and guests over the past few months. This challenge of not having support, not having people around you, not having people on the line that you can talk to. When I was a trader, I was in that same thing. I started in a trading room in the 80s, had people around me that would show you the ropes, that were there for you when things weren't going great, would give you a little bit of advice. And then you had brokers as well who, obviously it was they wanted you to do a lot of business because they would earn off the volume, but equally they wanted you to succeed because they wanted you to be there as a client for many years. So there was a dual aspect to it. And in fact, I think, I made some great relationships with brokers because they were also helping me develop as a trader. And there's two aspects to that. One is the learning element, and two is the support element, the having people to talk to and converse with, and then to meet at the end of the day or at lunchtime. And now it's just you, a keyboard and a screen for 99.9% of the people in this game. And this loneliness.
Yeah. No, I think there actually, in what you say, there's a few elements in there at the same time. So one is, which sometimes people kind of mix up a little bit. So there's obviously the element of trading, pure trading like we used to do, interbank market making, blah, 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 blah. You may not need to know everything about, the next trade balance or the next Fed meeting. You actually just keep on surviving the day by all the flow that is hitting your book. So that is a different kind of element of trading than what we do now or what the job involved into, which is obviously most of the flow now is going through e-commerce. Traders are there, a handful are still there to maybe take care of some bigger flows or, do the, add value by positioning. And that's another element that has changed trading in the last 10 years, where a lot of old spot traders, they have been brilliant traders, but not really good in taking risk. So we have to separate those two. I mean, they were good in managing the risk if they get given a big transaction, but if they had to make money of thinking, is the euro going up or down, is the yen go up or down, they haven't been so successful. And so there was a big transition now in the last 10 years where maybe those that haven't been always at the upper side of that curve of change have fallen through. And I have worked with people, or I was managing people that have never, ever managed to make that transition, which have been brilliant traders at the time. They're still great traders if, a big flow comes in, but they can't make any money trading because they have never really changed with the market. Because the market, can't tell you, maybe it changed 10 times. In my view, it may have changed 4 or 5 times, and it changed again in the last few years with algos. And we can complain and think about the old days and how great everything was, or you can actually just say, this is how it is today. This is how I have to trade today to compensate for exactly whether it's a loneliness, knowing less, no one talks to each other, which means you have to be maybe a bit cleverer and you have to be a little bit, pay more attention. That's what I, for example, try to tell my students. I said, reality is, I'm 35 years in the business. I start my day between 6 a.m. and 6:30 in the morning, and my day ends, at least the physical screen time ends somewhere between 5 and 6 p.m. Obviously, I still keep an eye on markets after that. This is not trade half an hour, get rich scheme. And let's be honest, I've been there and done it. And if I'm working 10, 12, 14 hours, that may just mean maybe you have to trade it like this. Because macro doesn't work the way it used to. There's more twists and turns this algo. There is the whole social media impact of trading now, where one position may look fantastic at 10 a.m. and it looks horrible at 3 p.m. just because of a tweet. That's the new challenges that we face with. And to be honest, coming back to what we said earlier on, for people that come to this market new, that don't have that sort of education that, you and I, we experienced in our time growing up, I wouldn't know. I mean, this must look horrible if you sit here trying to guess what's going to happen next. So I think people do need help. This is not a casino. This is not watching some funny numbers go up and down. If you want to become a good tennis player, you take a tennis coach. If you want to learn the piano, you take piano lessons. You're never going to be the next Beethoven if you don't. That's just my view. Of course, it always means it's a bit of self-interest because I do tutoring. No, I do tutoring because I strongly believe that no one can be left alone out there. They just have no chance of success on their own.
That's the same with me with coaching. I work with many traders. I wouldn't say I tutor. I don't work on the technical aspects. I work more on the human side, the sort of the mental aspects, performance, getting yourself in the right state, managing yourself to be more effective when you're in the role, dealing better with risk and uncertainty, and improving how you do that. But it's all part of the same thing. And I meet many traders who think you can just come into this job, you can land on day one, and within 2 years you're going to be sitting on a beach retired somewhere, starting with a £10,000 pool of money. And I'm like, okay, this is a highly skilled job. People don't realise it. It's such a small fraction make it, and they make it because they're skilled. They develop the skill. And I always tell people, if you decide that you want to become a boxer, you're not going to be turning pro for many, many years after starting it. You're going to have many fights. You're going to get badly beaten up. You're going to learn along the way. You're going to have coaches. And if you get through that small group, perhaps after 5 or 6 years, you're going to be starting to turn the corner and maybe getting a few pro-am fights. And I said, trading is no different. It's an incredible skill, and the people I coach and the people I've worked with all my life, they are brilliantly skilled, and usually they were skilled in one niche. I wasn't good as a market maker. I'll always put my hand up and say that. But I was pretty decent as a proprietary trader. Every different niche is a different skill, and I wasn't good as a long-term trader. I was very good at finding short-term value. So it's not only becoming skilled, but it's usually becoming skilled at some sort of niche within that. And
to be honest, this is something I work on when I do the tutoring as well. The reality is, it's let's say probably your job is what you do in your education. My job is what I do in my education, of just telling everyone, this is what's all out there. But there will be things that you like. There will be things that suit your character, and there are things that don't suit your character. So in trading, you only focus on those that suit you, that you love, that go with your character. You don't try to improve in the areas where you realize it doesn't suit you, because everything that doesn't suit you in trading costs money. So you want to focus where your talent is or where your preferences is, and try to get better at that. So I 100% agree. And I call it a toolbox. So I regard it as my job, or that's how I acquired my knowledge over time. It's a toolbox. Yeah, you start off with a screwdriver, and hopefully over a few years you have like a decent toolbox, which makes you be able to trade different markets. Because the worst thing you want, especially for those who trade for themselves, that you need to make money to pay your bills, or it's your job. If you only active in one particular market, downside is that market might only be there 3 or 4 or 5 or 6 times a year. So you have to build certain talents. You have a toolbox to sort of realize when to slip from one role into another. For example, this year, I like, to be honest, I'm macro on the one side. I manage half my macro risk short term as well, because obviously I grew up as a spot trader and would be a shame not to use some of the old talents to kind of optimize underlying risk. But there were many points this year where you just got to the point where the storyline, the themes, the narrative is so complicated. They go like, you know what, macro makes no sense. And, you're better off just chip and charge. And it's this kind of ability that you can easily switch from one role into another role. And this is actually what has some sustainability in making money. And the more you learn these kind of things, and again, I was lucky to be a spot trader for 15 years of my career, and then evolve into the proprietary side before it then ended up into both, running a desk, proprietary, and short-term trading, and running traders. So I think I've been a little bit everywhere in my career, which now obviously my current role is fantastic, because it means I can slip in and out of everything I've ever done in my career, which is, the sort of a nice thing now, and I only now appreciate what I learned in my career. And it's the same when I do tutoring. When I started it off 2 years ago, I was amazed, even though it may sound silly, but I was amazed how much I know, because you don't actually think about what you know when you in your day-to-day business. Only once you try to pass your knowledge on do you realize, oh, wow, I actually do know a heck of a lot.
That's very interesting.
Quite fulfilling, actually.
Indeed, I remember when Steve and I first sort of got our act together about just seeing where our world's knitted, we decided to go and have an hour lunch. Anyway, 6 hours later, we're still talking about the fact that, we know quite a lot, which is great.
That's it, right? And this is maybe one thing.
Easy to talk about, huh?
Yeah. No, that's the other thing which I'm a little bit scared about the world today, if you just make a quick fast forward for a moment, which I fear there's a total brain drain in the city in terms of the way where the business has been going. Don't get me wrong, I'm not like one of these old traders who are crying about e-commerce. I couldn't care less. It has its place. It's like the ATM with the banks. So that a lot of, that just turnover goes through e-commerce. Perfect, right? It doesn't irritate the trader. Perfect. But at the same time, we have now, I'm not saying this is true for every bank, but, I would say for a lot of banks that have just given away the knowledge, the know-how that was out there, and may not even at times have incorporated into their machines. Some smarter machines, maybe yes. They saw the point of using the experience from senior traders that, yes, I'm not a quant, but, in some of the banks where I was a manager, I was part of a triangulation between e-commerce, quant, and actual voice trading. Because at the end of the day, we still know a little bit about how to cover risk, which currencies are more risky than others, and so on and so forth. So there was a valuable point. But now, generally, as you pointed out earlier, it's a lonely game. There are clients out there who love to talk to people, and it's just a lot lost out there, it feels.
There's a generation change, isn't there, with this sort of, I suppose, the retiring off of the people with 30 years of experience and the bringing in of the grad teams and all of that new blood. Which we see throughout, I think, industry. But I just want to cover a point. We talked about the need of a toolbox, and so I'm going to throw a question out there. But we talk about the toolbox from our perspective, and that's kind of like a look-back perspective to some extent. We know it's vital to have these fundamental skills of risk, of process, of decision making, where you get your information from, the sort of social networking to feed you ideas. and we get that, and that's all part of the toolbox. But I'm really sort of looking at the market changing shape to these guys that are retail traders, whether they're looking at it in the same lens as we had, and whether they are, and I'm sure some of them are looking at this as just some sort of game. And it's like the gamification of the business, and actually going forward, then maybe it is the world where you're crunching big data, you're orientating design thinking, all those new ways of looking at things. That it's sort of a data world now, and that could get to the point where if you want a market view, you say, "Hey Alexis, where's the market going in the next 10 minutes?" I think the world's changing, so there's a different type of toolkit that may have to be bolted on to the absolute necessary one, which we all know what that is. But things are changing so fast out there that I wonder whether there's also another type of toolkit that comes from that e-world, and wherever e-world is going next, which sort of young
I have a view on that.
Are going to be more aware of.
Yeah. Generally, I think, and that's maybe just the way I've been breaking it down over the years. So reality is, I'm a strong believer of efficient markets. That means the price will eventually be right. So macro works. So if you do have, just keep it simple, if you have a grow in one area and you have like a recession in the other, eventually the price should reflect that. The only thing that has changed is the way we go from A to B, right? So the macro, the price will go eventually from A to B. So while 10, 15, 20 years ago, it was quite, there were a lot of clever people out there that didn't mind to roll the dice on that, and you got that trend sooner. You got it more consistent, you got it quicker, you got it, in a more manageable way, which is this sort of zigzag up or zigzag down. What you have now is algos with, I call it the goldfish market. There's a big story today, tomorrow it's forgotten. You have to price that in. So that means the way the price goes from A to B has changed. So that's how I change the way I take risk. I may have gone into risk with 2-3 clips in the past where I just go like, okay, I like that, buy and a buy and a buy. Nowadays, it's like, okay, story develops, you get long a few, 10, 15% of your risk, and you may end up having 6 or 5 or 6 or 7 clips into the trade you like because it's going to go overlapping, it's going to go sideways, it's going to go against you first. It's just the way. And I think that is where the challenge is. And you are right. Maybe it is Alexa at some point. I don't know. I hope not, because I don't do Alexa. But I think it's, and that's probably where we drive into psychology a little bit for a moment, where, let's say I cheat my brain as well at times when I take risks. So as I said, if I fancy a trade, I know the timing is probably not perfect, so I have a little bit of risk. Let's just say, for argument's sake, I buy a little bit of euro if I fancy it higher. But the position is very small because I know exactly that these days, it doesn't matter what the story is, doesn't need to go up straight away. But I have my foot in the door, and then I observe the market. If it goes, obviously I have maybe 2-3 other levels in mind on the downside to buy into a dip. So if it dips, I kind of want it to dip because I'm only long 10% or 15%. So actually I want it to dip so I can buy some more. So that's the way you treat or you cheat your brain is, yes, you're long. Yes, you're losing a little bit of money. It goes down, but it's great because you want to buy some more. If it goes straight up, yes, you can say, I wish I would be long a few more, but it doesn't matter. You make money. So again, your brain isn't stressed. So there's a lot of techniques I kind of adopted over time, which more so I do now in the last few years than I may have done institutionally. Again, different ball game and it's your own money. It's different ball game and it's investor money versus if you just can have a punt working for a bank. So there's two. So I have refined my trading strategy in terms of risk, but as well as the way the market has changed. The algo world, the social media world, you just need room. You need to have room all the time. There's just no home run trade. And this is a big thing I try to convince retail traders to understand. there is no home runs. If you're lucky, you have one a year or two a year, if at all. But this is built on consistent work, consistent managing your risk, consistently improve you or grow your P&L. It's not based on a home run. So it's like the lottery ticket. It just doesn't exist. And that's how I refined everything over the years. And, maybe I need to adjust again because I do not yet know, as you say, if it is Alexa tomorrow, then, maybe I have to buy Alexa. But, at this point, I think what I've done now works quite well. But I'm always open for change. Not that I like the change, but again, as long as you like trading, as long as you like to make money, you just have to go with the change. And if you stand still, you start losing money. As simple as that.
We interrupt this podcast at roughly the 38.2% point of the podcast to talk briefly about how delighted we are to be associated with the Society of Technical Analysts, or STA, as they're more commonly known. The STA are one of the world's leading bodies for training and educating investment specialists and traders from around the world. They run distance learning and outstanding in-house diploma programs delivered at such prestigious universities as Queen Mary University of London, King's College, and the London School of Economics. To learn more about their education and training programs and diplomas, go to sta-uk.org. Now, back to the podcast. What degree? Because I'm hearing your process, and it's probably well, I'm guessing this is excellent. This is outstanding for the audience to listen to that. But everyone has a slightly different process. To what degree does intuition play a role in your process?
Oh, big time as well. To be honest, And this is something I realized when coaching or tutoring younger traders that have really just started off in the last few years. When I cover one section, which is crosses, like we as old dogs, we used to know how to calculate our crosses because we had to. There was no machine. So if someone asked the Bayesian, you had to calculate it. And this brings me enormous advantages now. Because what I watch is not just the dollar pairs. I watch all the cross pairs. I watch price action all day long. That's actually why I do screen time, because so often I see, emerging markets start to move, go like, oh, okay, something happening there. So that means, whatever. If EM starts to weaken, then I know, okay, it's probably time that dollar yen goes down or yen cross or whatever. Then you're watching your crosses. You see exactly who the driver is. There's so much. I call it, the market is talking to you every single second of the day. Yes. You just have to bother listening.
Yes, it takes years to learn its language, and that's what people fail to understand.
Absolutely. And this is what I tell, again, when we talked earlier about the toolbox, so I tell people this is what you have to look at, get used to look at. I make them calculate crosses so they understand the easy one, like euro dollar times dollar yen equals euro yen. Then the more difficult ones, the dividing ones, with the sterling ones or sterling Aussie or euro Aussie or whatever, make them calculate, make them run through examples to understand the dynamic of a cross, right? So we're talking about the high beta ones, sterling yen, euro Aussie, sterling Aussie. That's another lesson where, it's not euro dollar. Yeah, euro dollar is easy. You watch it, goes down, goes up 5 pips, whatever. People suddenly don't realize when they're sterling yen, it suddenly moves 80 points, and they haven't even noticed it moved, right? But the subsection of that is you will always understand what's happening. So if the euro starts moving, and 90% of the market thinks, oh, it's a dollar move, but if you actually understand crosses, you may actually notice, oh no, it's actually a euro cross move, and so on and so forth. But again, this is the toolbox. And this is what I do all day long. That gives you sometimes. Yeah, sorry, go ahead.
Yeah. It's just great to share that. I mean, the market isn't just the bid and offer and the size of the offer and the size of the bid. And a lot of people see that that's the market, that's their market. And one of the ways that I describe a market is like like a bird murmuration, where these birds, you get multiple birds are in this flock. You got the depth, you've got this. There's occasional sort of drifting off into some sort of order, but then there's disorder, but you've got this interconnectivity that keeps it all together. But at any given time, it looks a bit different. But it's knowing when it's stretched into a direction that it shouldn't be, and knowing where it's likely to come back to is kind of like what trader skills are all about, in my view.
Absolutely. And the other thing, what I learned very early in my career, obviously when you start in FX, you're overwhelmed with the flow, right, back in the interbank trading days. But then, you move on to suddenly realize, then I can't remember, was it 1987 and 89 stock crash? So you suddenly go like, oh, equities are important, right? So you start watching equities. Then obviously 92 was the EMS crisis, 97. I mean, there were a few of these big, crises, and every time you learn something more. And the last time I learned something, well, actually I never stopped learning, but the last time I made a big step was, I remember, in 2007. February 2007, I was at Goldman at the time Goldman Prop. On the way to work, I read some problem about a credit fund or something, so I go like, I don't know anything about credit. So I go in there, have a chat with the guy who's trading credit, and started to realize, this could actually be a big problem, and obviously, the rest we know about 2008. So I've gone from, learning about equities, and I'm not talking about learning as in I need to know single title, single stocks, or whatever, just about the correlation stuff. Then we learned about fixed income. I learned about CDS in 2007, 2008. And it's fascinating that as an FX trader, you are probably the one that used to learn most about other asset classes. Yeah, the equity guy tells you, I sometimes look what dollar yen is doing. Yeah, fine, but that's as far as they go. I think in FX we always have been, in a position where we have to, if you want to be good or if you want to see the writing on the wall, when you start to realize where a market starts to be in stress, it eventually comes back in FX with the old traditional, risk on, risk off, whatever. And so I felt over the years I learned about more and more markets, and these days I just watch them all. Yes, I just keep, most of the time maybe it's not a story, but I keep an eye on every, key bond market, equity markets, credit, just in case I may need it tomorrow or next week or next month or next year. That's just part of our job if you just want to sit there and know what's going on. But again, it's a learning curve, and nobody can, everyone who learns trading today has to know there's no get-rich-quick scheme out there. You have to have a passion for the job. And that's another thing I tell every guy before he books a lesson with me. I said, listen, this is about passion. This is about loving this. Because if you don't love it, I personally believe you can never put the hours in that are needed to be successful. That's at least my view about it. And as you can hear, 35 years doing this, I still love it like on the first day.
There's something else which I'm so kind of picking up between the lines, and it's and I guess I'm not talking so much about you now, but I'm talking about in general with trading and FX trading. One of the problems I meet for a lot of people, a lot of young people new to this game or in their early years, this idea that they think, because I'm not making money, but because they're not making money because they've had a month or two without any P&L, that they're failing. And I have to remind people that, actually a lot of the most successful traders I've known, guys who have had outstanding careers over 30, 35 years, they will have had periods for a year or two within that where they didn't make any money or where they lost quite heavily. And
oh, definitely.
I have to make it clear that it's never a straight line. That at times you sink in and out with the market. So at times you are in sync with it. At times you have to then you fall out and you have to get back into sync with it. I can't think of anyone whose career has gone in a straight line who hasn't made. If they were to sort of freeze, walk away, look back and think, well, that was a mistake, I got that completely wrong. It's not like that. There is no right or wrong way in the market. It's always, like Mark said, it's always a game. Like no one is the number one golfer forever. They can disappear out of the top 50
Yeah, there's two elements in what you just said. So the one element, absolutely correct, is what I always used to say, and it happened to me and it happened to people that did work for me, is you see a good trader when he's digging himself out of a hole. That's when you really see a good trader. Because making money, everyone can make money. You can just take someone from the street, put them in a seat, and he may actually make 10 trading decisions and 10 are right. I mean, it can happen. But when you really see a good trader is when things don't go well and you start losing money, you're down money, and then you dig yourself out back into profit. That's when you see the true nature of a good trader, the true character of a good trader. And no, that's absolutely right what you say. There's and that is probably the problem. I hate to mention it, but it's the sort of millennial, maybe problem of having everything instant. A trading career is never instant. It takes years and years and years to build. And that's maybe where the attention span, where it, from 10 people starting it up, maybe only one may actually follow through, and 9 will just give up along the way because they don't have either the necessary patience, necessary passion to actually follow it through. So you do need to be a little bit crazy in your head probably just to follow it through. I don't know. And the other thing you mentioned is, and that's a big point in what I'm trying to tell people, is respect the market. The market is always right. You might not agree, but if you short and the price goes up, the market goes up, you're wrong. So the market is right. And that is another thing that I see more obviously in retail than on the institutional side, where someone would say, oh, that doesn't make any sense, and that's why I'm selling more. Well, it's definitely a recipe for disaster, that strategy. But respect the market, because the market is always right. That's another thing I learned very early on. And like Stephen, obviously volatility was a lot higher back when we grew up. So probably you had to actually respect the market even more so than maybe these days at times.
Yeah, I mean, very interesting. But is there also a need to respect yourself, to just manage yourself? Because, we talk about, market awareness and all these sort of key critical qualities. But if we're not managing ourselves or understanding that when we're stressed, our vision on the market is kind of reduced to next to nothing. There's also a need to manage yourself and manage ego of getting, not too excited if things go so well that you then forget about all the rest of the process. But I'm sure you'd have felt also that during your career that, self-management and associated ways of managing yourself are also significantly important.
Oh, big time. To be honest, these days, now that I have gray hair, I kind of notice it. These days I call it the mirror talk. So, which is probably the biggest, most difficult thing for a trader, to actually look in a mirror and actually comment what he sees, not what he wants to see. And, of course, like growing up as a trader, you always, go, oh yeah, like this excuse and that excuse. And at some point in time, when you grow a little bit older, a bit more senior, you realize, okay, this is where I'm not good at. This is where I'm very good at. So that again helps you then in the market. It's exactly what you say. Ego is totally, you can't have an ego in trading. Yes, sometimes it helps a little bit when you're really onto something and you push whatever, but generally an ego can hurt. So it's exactly right what you say about managing yourself. But it really, that's why trading is so fascinating. And some of my lessons I do, sometimes I end up, just talking psychology for a few hours, because it's amazing that one little mistake on the day can have an influence for the rest of your day, for the rest of your week. Just one little thing here and there. And it's just about knowing when to back off. And I had to learn that, very painfully in my early years, when you just kept pushing, not actually realizing that you hit your head on a brick wall for days and days and days. And then when you grow older, you kind of start to realize that, okay, that's maybe not my market. That's, when you should back off. But it's all a journey, right? Every element that we discuss now is another element what you have to be as a trader. And that's why it's so hard to become a successful trader. That's why it's so hard for retail to replicate that. Yeah, some can make, some okay money on the side. Can most make enough money to sustain a trader career? Maybe not, because they may not have the ammunition to go those 5 or 10 years that it needs to already be at a respectable level in terms of knowledge. And for us it was easier because we work for the bank. P&L, you had to make money overall, but you paid a salary. So there's two complete different jobs if you talk about an institutional trader or a retail trader or someone that works with his own money. Complete different world.
There's a paradox there, isn't there? And it's, as you say, when we started, we had a salary. So we got paid to learn almost. I mean,
Yes.
I don't think I became a good trader till, this probably sounds quite bizarre, so maybe it's 12, 13 years into my career. I had ups and downs. I had, there were times where I was great, and there were times where I felt, God, I hope I don't get discovered. Hope I don't get found out. And that's the paradox, because, I don't think I could have done it now if I started now, because, I would have had to live without any income for many, many years. I would have had to have drawdowns on a pool of money that I don't really own. I wouldn't have had the money to play with leverage. I mean, leverage is a vital component for any developing trader. Where I wouldn't have had the risk management, money management skills, I don't think, in those early days. But then I was fortunate. I mean, and some of the people that I do know who have succeeded in retail trading more recently, they've worked for prop firms, and actually they had people that backed them. They showed some early skill. They got mentored. They gave them a little bit of money to kickstart them. They were young and they lived at home as well, so they didn't have any responsibilities, any expenses. Or some people I know actually did have a lot of money because they built a business early and they sold it quite early, and they suddenly had a lot of money, so they were fortunate as well.
To be honest, I have one student from last year, and he's a commercial airline pilot.
Right.
And I realized from the start there are correlations between maybe an FX trader or a trader mentality in general versus a pilot. So there's some probably characteristics about risk or risk reward is probably not too dissimilar maybe. And he picked it up extremely quick. He made some good money for himself. Obviously the trading account is large, so the percentage return is impressive. It may not filter down into real hard coins, but he's now exactly in what you said, one of these firms that give away money to successful traders, and he just every 3 months is increasing his account. So he is one of them who he's probably not young, but he's maybe mid-30s. But he picked it up. There are still people that can pick things up, and he looks probably at the market in a similar way that I do, obviously, because I was probably his tutor. But it works. Someone who can grasp it, it works, right? It still works. You can still do it today. And maybe with a good tutor or a good mentor, you kind of can avoid the pitfalls where most of retail loses money at first. But if you can stay clear of those accidents, there is actually a path that, it's still, obviously, as you rightly say, it's still going to take years for making more money, but you can be profitable maybe in a year or two, because if you discipline and you know exactly when to stay away, you know exactly your risk reward, when you go like, what, I have no idea if it goes up or down, well, then don't have any risk. So if you then only supply, or if you only take risk when you actually have an idea, you have a story, you have a nice level on the charts or whatever, then get involved. The biggest downfall, and I was guilty of that massively, was overtrading. I overtraded in my early career like mad. I had turnovers I remember back in Morgan Stanley, I had a very good boss who once took me into the office. It was a quiet day, 25 pip range in the euro. I think I lost 250 grand. Didn't move anything, and he took me in the office. I go like, okay, Beat, how's it going? Blah blah blah. Do you know how much turnover you made in the euro today? I said, pooh, no idea, maybe billion and a half. He said, no, it's about 3.5. I said, okay, oh wow. And then he said, our euro trader, what do you think his turnover was? I said, well, if I done 3.5, it must be 5, 6. He said, no, 1. So I go like, oh wow. And then I started to get the message, right? And I have not forgotten that, but that must have been, I don't know, now over 20 years ago. A very good boss. He just a very, very fine sort of conversation, 5 minutes. I left that office and go like, oh wow, if someone was able to show you this is what you do wrong. You lost 250 grand today because there was just no trade out there today. And it's a stepping stone. It's a building block to learn to actually someone hold a mirror in front of you and say, that's you, right? Whether you believe it or not, but that's you. And then if you don't like what you see, obviously, the P&L did speak for itself, you change. And I haven't forgotten that. So there is probably, you could ask every trader that's been around for a long time, there were probably 2, 3, 4 moments in his career where a manager at the time pointed something out that he has never forgotten, no matter if you're out there 30, 40, 50. And that was one, over trading. And then I started to observe my trading and realize, oh yeah, I do it quite often. And over trading, obviously now with e-commerce, the brokers are happy, obviously. But this is probably another big downfall of retail because it's so quick in and out. It's no embarrassment like in our old days. You call someone on the phone and ask a price in 20 and you can't buy now and sell in like 30 seconds later. It's embarrassing. Nowadays, you flip your position every second if you want, which obviously makes brokers happy and makes retail accounts losing money. Over trading is a big element, and that needs a lot of discipline not to do.
Well, from a broker point of view, you see it as well. You sort of know that. Why is he trading? God, it's quiet. There's nothing going on, and there's this sort of desire to just, almost feel pressured into putting a trade on. And that self-discipline to step back and pause and think, no, this is not the time. But you find it with people that are very experienced as well, to be honest with you. I guess, individually we're all very, very different, but individually we're all the same at the same time. And I can understand that, you might have just had such a week where you think, I've done nothing at all. I just need to do something to sort of almost like validate myself. And you just push yourself into a trade. And I've, from a broker's
to be honest, this is what I was told when I was a manager from traders, when I exactly sort of tried to highlight, listen, you had to go at this for 3 days in a row, didn't work for 3 days, maybe it's just time to realize it doesn't. And then they say, yeah, but, I'm getting paid, I'm coming here, I feel like I have to do something. So I kind of get it, right? So people, as you just said, you pay the salary and you come in, you not come in to sit around from 7 o'clock in the morning into late in the evening. So I get that. But it's again about fine lines. It's always about fine lines. It's always about gray area in foreign exchange, isn't it?
Yeah, and the manager, right? So it's almost down to the management. The management could be, squeezing a trader into a trade because, they prefer you to have some sort of risk on. And I think management can define, the behavior of a trader, particularly in a blue chip firm,
Absolutely.
It's something interesting, which I'm picking up on here. And you talked earlier on, you referred earlier on to the man in the mirror, I think was the mirror man. And we've got to be careful not to go down the Michael Jackson route here.
Maybe not.
you made an interesting point that, there's 4 or 5 times in your career where someone will say something to you that will wake you up. I had the same in my career as a trader. I had the same when I talked about 13 years into my career before I started becoming good. That was when I had coaching, actually, and I always accredited that coach. What he did effectively was hold up a mirror to me and allowed me to see who I was. And what's interesting is when I worked with other traders, I knew what those traders were good at and what they weren't good at, but they didn't know themselves, I don't think. And then
I would agree.
That's the same for me. Those people around me knew what I was good at and what I wasn't good at, but no one ever told me. So you have to find that out for yourself. And
True.
I was very fortunate to have a coach that took me through that process. And then,
but you know what the advantage, the difference now is, back then you had like trading rooms full of traders, right? So we talk about a time when you had like 30 people around you who probably all, a few years more on the clock than you had, that may tap on your shoulder. And this is what I see today, because I have a lot of youngsters actually. I get contacted probably, weekly a few times by different, young people in different careers inside the bank. They don't, and what I hear consistently is they don't have that sort of people around them anymore, or those people are too busy because the shops, every desk or floor is so lean of people, don't even have the time to actually start educating or be like that man behind your back who goes like, hey, Stephen, don't do this or don't do that, right? This is not around. So the person to hold the mirror isn't actually out there. And that's what I meant earlier about the worry I have about the brain drain in the city.
Well, I always tell people, keep a journal. I mean, for me, that was had a huge impact on my trading. And it's not just keep a journal, because most people I know who keep a journal are not very effective at keeping it or using it. And a journal to me is that tool which can become a mirror. It's writing down not just your observations of the market, but your observations of yourself and what you were doing and what you were thinking, and what you were feeling, and then looking back on it. Because the only way that then becomes useful is if you review it, and then you start to notice patterns that you weren't consciously aware of. But when you read it, you go, wow, I did that there, and I did the same thing there, and I did the same thing there. And there's some sort of behavior I'm doing which I'm not aware of in real time, or I'm not conscious of. But when I see it here in the mirror, and I did this, and suddenly I was aware of certain behaviors that I was doing that were both productive and unproductive, and by becoming aware of the productive ones, I could then actually leverage them more effectively. And when I became
this is
aware of the
nothing else
unproductive
than
ones,
actually,
yeah,
this is nothing else than actually experience, right?
Yes.
Because this is what experience is, right? Nowadays, again, as I said earlier, you never stop learning. So I'm not saying I couldn't learn. I'm actually just trying to learn another product that seems to be could be the next shoe to drop, which is CLOs, another credit product. But I'm not there yet to talk about it because I don't know it yet. But in terms of trading your character, I mean, after doing this for 35 years, this is now the big advantage, because you know every angle of it, and that's really what it is about. To know every element of your character, to know exactly, again, what we said earlier, when you start to see the stars line up in the market. You mentioned a gut feel. It's all going into one. Gut feel, I remember a student once asked, about gut feel, it's almost like 7 cents. No, I said, no, it isn't. Basically, everything you always read, and subconsciously, there's a puzzle being solved. And sometimes you just need one more element that you see, and everything starts to fall in place. So gut feel is just part of your work. It's basically honest the work that you did. Maybe you've been reading for the last 2-3 weeks, focusing on a story, not even realizing how your inside is working on it. And that's what I call myself a puzzle solver as well. I'm always trying to be, I'm always looking for puzzle stones, because I want to be the first that already can guess what kind of picture I'm creating. And so that to me is gut feel. Gut feel is not like, you have a crystal ball or something. No, it's a result of work. And that's, again, how I look at it, is that my gut feel is, because I read a lot, I look a lot, I watch the market a lot, I spend a lot of time in the market, and plus the experience equals, at some point you just feel it, And whether it's repetition, whether it's pattern, whether it's actually the story you've been working on. I couldn't tell you at the end what it is, but it's there. And everyone can build that. I think it's a result of hard work. It's not because you're gifted or something.
No, I think you're absolutely right. And one thing to mention of that, of course, is that our brain, gut, vagus nerve sort of connectivity suggests that our mind is more than just what's in our head. With something like 200 million brain cells in our gut has the same number of brain cells as a cat's brain. But there are times when you have to listen to it, and it's all part of the feedback loop of us just realizing what through intuition is going on. But of course, what's interesting is that if you're under any degree of stress, all of that is switched off.
Yeah.
So you've lost your intuition as well. And that's where things...
You see, there is where risk management comes in. So what I tell people, and that's how I trade, I make, let's forget like reactive trading where you jump on something on a headline. Let's talk about, a view trade. I do a trade plan. A trade plan is, okay, I fancy this. Okay, I look at the chart. Okay, where are we? Where are the buy levels? Where's my stop when this all goes wrong? And because I have a trade plan, so I know exactly, okay, I buy some there, some there, some there, my stop is there. So before I even have the risk, I know the costs of the trade. Because if you're disciplined and if you line your orders up the way you just planned, you always know, okay, it's going to cost me this. So stress doesn't even enter my brain because of that. Because I already know before I actually take the risk, okay, worst case, cost me this. Can I afford it? Yes, I can. Because obviously you're part of your risk management is what you can afford in a trade. So it should never put, okay, if you have 10 trades in a row that you get wrong, okay, different problem. But as a trade for trade, I don't have any stress ever because of discipline, risk management, and a trade plan. And that's what I suggest to everyone to do. Because if you know your costs before you enter the trade, you can then have a window to decide, oh, no, it's too much, or no, it's okay. So you shouldn't be stressed when it happens. Stress comes in when, there's the classic mistake of fading a move, right? So cables start to scream high and people go, oh, sell some. Suddenly they sold 4 times and it's still going higher. That's stress. But it's no plan. It never was a plan. They don't even know where to stop out. The only thing they do see is the P&L ticking, deeper into red. That's stress. But actually planning a trade where you go like, I like this because of ABC or chart or whatever. It doesn't even matter why you like it. But if you have your entry and your exit, there's no room for stress. I mean, I've never got stressed when I had a plan. I did get stressed in my career when I didn't have a plan. That's when it usually goes a bit wrong and when it gets expensive. But I don't allow, I think if it's a good planning with discipline, I don't think, at least in my case, stress is not coming up. There you go like, oh, okay, it didn't work, or, you're a bit upset because it didn't work, but that's it. Move on, next trade. At least that's how I achieve to train my brain. Whether it works for someone else, I don't know, but those who started to apply it agree with me that actually, it was liberating.
Sure. That's great wisdom. What great wisdom. I think perhaps we could talk for another 6 hours, I think.
Yeah, probably.
With all of this. But we need to invite you back, I think, because we're getting towards our sort of natural end of this particular podcast here. I think we've covered an awful lot of material, an awful lot, great wisdom. And those at the retail side that listen would have picked up so much from this outstanding value. So we're very, very grateful for you sharing this conversation with us. And perhaps, Gus, you want to mention again where people can find you in terms of your web details? So
my website is macrobeat.co.uk. I'm on LinkedIn. As in LinkedIn, I'm under my name, Beat Nussbaumer. On Twitter, I am on the MacroBeat L. I'm out there tweeting a lot. I'm out there supplying stuff on LinkedIn, so you definitely can see me there, and then just drop me a message if there's anything I can help one way or another. What you see on LinkedIn is obviously only about 2% of what I do, because I have clients on the retail side and institutional side that have subscribed to, my I don't call it research, my sort of trader-based charting, trade IDs. I share the risk I have, what I do, and that's why I can't actually just put it all out on LinkedIn, because it would be unfair for the paying clients. But you definitely see me out there. I'm probably out there most days, and happy to help anyone that has a question.
That's fantastic. It was an absolute pleasure. Steve, any final comments from you?
No. I've just followed you on Twitter. You've just got a new follower.
That's great.
Hopefully, if anyone's listening, you've gone up. You're obviously new to it at the moment. But you're a genuine one, because, as we know, there's a lot of people out there on Twitter who are fake. This is a genuine guy. Okay, it's at MacroBeat L. I mean, for people to listen to you, there's people out there that have spent a few weeks in the markets trying to sell products and services, and we know what they are. And you're the real deal. 35 years in the market. I think this is
appreciate
it. Thanks a lot
for many people.
Yeah, great, so, very authentic.
Thank you
very
much.
We don't get to that where we go, Alexa, where's cable going in the next 10 minutes?
Yeah, exactly. then we all retire.
Exactly.
Thank you.
Well, thank you so much for having me, and more than happy to do another one whenever. This is my work. I'm here every day, so I have a lot of time available for these things.
Fantastic. Thank you for listening to the podcast today. This podcast was brought to you in association with the Society of Technical Analysts. You can find out more about the Society of Technical Analysts and their outstanding distance learning and diploma programs by going to their website, sta-uk.org. If you enjoyed this or any of our previous episodes, please be sure to share this with your colleagues and peers. And if you could give the podcast a rating and a review on iTunes, that will be very gratefully received. You can find out more about AlphaMind on our website, alpha-mind.net. You can visit our blog, alphamindblog.blogspot.com, or Google AlphaMind blog. We have a compendium of useful articles on there and information on our page links, including details of our powerful coaching program, which works with traders on trader mindset and developing the human aspects of trader performance. This is delivered both to institutions and privately to retail traders. You can also comment and follow us on social media, on Twitter at AlphaMind101. We have a LinkedIn group, the AlphaMind group. That really leaves us to say just have a great week, and thank you for listening.